This is going to be our first lecture, guys. Today, I am going to discuss about what cryptocurrency is, the Bitcoin, and altcoins. This lecture will be about fundamentals. Again, welcome to the world of cryptocurrency. But before we start, I want to share to you a fact. If you had invested $100 in January 2011, where Bitcoin was only 30 cents, you could have earned 333 Bitcoins. Now multiplying that to the price of Bitcoin in January 2018 of about $11,251 will equal to $3,750,296. Now that is big for a $100 investment, and you too can be part of something big like this, because in this course you will learn how to find potential coins that can soar up to 1,000-fold just like Bitcoin. And yes, it is possible because Bitcoin is still in its early stage. To learn more about how the price of Bitcoin grew, read the article that I have linked after this lecture. Now let's jump on our first lecture. I will do my best to teach everything to you as simple as possible. What is cryptocurrency? A cryptocurrency is a digital asset designed to work as a medium of exchange that uses cryptography to secure its transactions, to control the creation of additional units, and to verify the transfer of assets. They are digital, meaning to say they are not printed out. They're digital. They are independent of banks, meaning to say they're not controlled by any banks. They're also held electronically, and it's online. These are the top 10 largest Bitcoin accepting retailers. We have the Microsoft, Dell, Dish, Time Inc., Overstock, Expedia, Intuit, Monoprex, Newegg, and Tiger Direct. By the way, what is cryptography? Cryptography can be broken down into two words. Crypto, which comes from the Greek word kryptos, meaning to say hidden or secret. The other word is graphy, which means the process of writing or recording. Cryptography is basically the practice and study of techniques for secure communication in the presence of third parties called adversaries or hackers. This is made for transactions to be safe within the blockchain. And what is a blockchain? A blockchain facilitates secure online transactions. For example, these blocks hold batches of valid transactions that are hashed and encoded. Each block includes the hash of the prior block in the blockchain, linking the two. The linked blocks forms a chain, thereby calling it a blockchain. It is decentralized, meaning to say no central company or person owns the system. Everyone can use it. Also, no bank or financial man is involved in every transaction. This is why the big companies are so interested in the blockchain. Before we proceed, I want to discuss about the cryptocurrency terminologies so you would better understand the following lectures. We have to tackle the basics. Let's start with the address. A cryptocurrency address is essentially the same thing as your home address. It's location from which you would receive, send, or hold your cryptocurrency. These are long strings of alphanumeric characters that looks exactly the same as this. Now what is hash? A cryptographic hash is a mathematical function that takes a file and produces a relative shortcode that can be used to identify that file. It is unique. Only a particular file can produce a particular hash, and two different files will never produce the same hash, and also it cannot be reversed. Peer-to-peer or P2P technology cuts out the middleman, meaning to say that people deal directly with each other. An altcoin is the community accepted name for any coin that isn't Bitcoin. Examples are Ripple, Monero, Ethereum, Dash, Litecoin, and many more. Now, what is hash rate? Hash rate is the speed at which a block is discovered and the rate at which the related math problem is solved. This is related to mining that I will discuss later on. Now, what are smart contracts? Smart contracts help you exchange money, property, shares, or anything of value in transparent, conflict-free way while avoiding the services of a middleman. A market cap is a market value of a cryptocurrency. For example, a Bitcoin. Bitcoin has a market cap of over $180 billion. Fiat. Fiat is a government-issued money or currency. A paper money like dollar, euro, and yen. Now, what are whales? Whales refers to an individual or a group of people that can manipulate the market using their massive crypto wealth. They are the big money crypto players. HODL basically just means to hold your cryptocurrency, especially on a very volatile market. Mooning or skyrocketing are the terms that are used by cryptocurrency traders when the price is going really high. The all-time high are the highest price a coin has ever achieved. Well, bullish is the prices that are expected to go up, while bearish are the prices that are expected to go down. Market trend. Market trend is a perceived tendency of financial markets to move in a particular direction over time. It's trending down or it's trending up. Alright guys, now that we are done with the cryptocurrency terminologies, we can move on to our next lecture. I'll see you guys in the next video. What's up guys? Going back to cryptocurrency. Now that we know that it is a digital currency and a medium of exchange, you can trade online using cryptocurrencies like Bitcoin and altcoins. So first, you would buy crypto using fiat money and then you can trade it to other altcoins. Or you can trade it back to fiat money after getting a profit. Don't worry, I will show you how to do this in the other lecture. You can also use it to buy something online that accepts cryptocurrency as a mode of payment. It is easy, right? And it is fast. Now, let's go to the topic of what is Bitcoin and is it a bubble? Bitcoin was the first decentralized cryptocurrency and created in 2009 by Satoshi Nakamoto. Only 21 million Bitcoins were ever created that will be circulating the cryptocurrency world. The price of Bitcoin goes up or down depending on the market. If a lot of people are buying Bitcoin, and we all know that there is only limited supply, the price of Bitcoin will go up as a compensation for that. Now, the big question, is Bitcoin a bubble? I wouldn't think so. The main reason why people say that Bitcoin is a bubble is because they don't know anything about it. Or every time that there is a market correction where the value of Bitcoin drops, people are saying that it's the end of the cryptocurrency. Just look at this chart created by Charles Smith. Bitcoin crashed multiple times since it was created, and it bounces back even higher and making all-time highs. Plus, it is backed up by blockchain technology that everybody believes in. Before diving deep in the other cryptocurrencies, let's discuss about the Satoshi. The Satoshi is currently the smallest unit of Bitcoin recorded on the blockchain. It is 100 millionth of a single Bitcoin. The unit has been named after Satoshi Nakamoto, the creator of the Bitcoin. So why is it important to know what Satoshis are and its use? Because you use the value of Satoshi on trading with other cryptocurrencies, especially if it is lower than the price of a Bitcoin. Here is an example. On Bittrex exchange, We are using Ethereum as an example. Let's say you want to buy Ethereum. One Ethereum will cost you 9 million Satoshis, or 0.09 Bitcoins. Some of you are probably wondering what Ethereum is. Ethereum is an altcoin. Now, what are altcoins? These are the other cryptocurrency other than the Bitcoin. Basically means alternative coin. Let us discuss about Ethereum. Ethereum was co-founded by Vitalik Buterin and was released in 2015. While Bitcoin aims to disrupt PayPal and online banking, Ethereum has the goal of using a blockchain to replace internet third parties, those that store data, transfer mortgages, and keep track of complex financial instruments. We are here at coinmarketcap.com. As we can see, one Ethereum right now is $930, or about 9 million Satoshis. Over on this side, we can search for other cryptocurrencies. We can see the market cap of Ethereum of about 90 billion US dollars. Over here, we can see how much or how many people are buying Ethereum right now via the volume section. And we can also see the circulating supply of Ethereum. Down here, we can see the chart. We can see over here how much Ethereum was when it first started up till today's date. Over here on the market tab, we can see where we can trade Ethereum on other exchanges like Binance, Bithumb, Kraken, and so much more. Over on the social side or tab, we can see Ethereum updates via Twitter. While on the historical data, this is basically the same as the chart, but it has better view of the prices. Now, on this side, we can see the cryptocurrency's website and announcements. We can also see the rank of Ethereum right now. It's number 2, basing on its current market cap. And over here, we can see if the coin is mineable or not. I will discuss about cryptocurrency mining later on my other lecture. Okay, let's talk about another altcoin. This is Litecoin. Litecoin was created by Charlie Lee in 2011. And there is about 84 million coins circulating the cryptocurrency world, making it less expensive than Bitcoin, because there are a lot of coins circulating the market. So, the more coins circulating in the market, the cheaper it is. And also, depending on how marketable that coin is, including how the market is doing. Litecoin right now is about $169 each, or about 1 million Satoshis. Now, Bitcoin, Ethereum, and Litecoin are the major coins that you will find in Coinbase, together with Bitcoin Cash, which is new to Coinbase, while the other altcoins will be found in other cryptocurrency exchanges like Bittrex and Binance, which will be tackled later on. Now, Coinbase is one of the biggest cryptocurrency exchanges out there. Some of you guys are probably wondering if Bitcoin Cash is similar to Bitcoin. This is where the Bitcoin fork comes in. A fork is a change to the software of digital currency that creates two separate versions of the blockchain with a shared history. When this happens, two different digital currencies are also created, hence the Bitcoin Cash. Now, why does this happen? It happens when there is a new version and upgrade, similar to upgrades or updates in your apps on your phone or computer. But in order for these changes to get approved, many people needs to vote and agree to it. Hello everyone. Today we are going to discuss about Bitcoin mining. Have you guys ever wondered where Bitcoins come from? With paper money, a government decides when to print and distribute the money. But Bitcoin doesn't have a central government. With Bitcoin, miners use special software to solve math problems and are issued a certain number of Bitcoins in exchange. This provides a smart way to issue the currency and also creates an incentive for more people to mine. Bitcoin miners help keep the Bitcoin network secure by approving transactions. They keep the Bitcoin network stable, safe, and secure. There are a lot of factors that you have to consider before mining. First is the capital. The price of mining hardware starts from $699 up to almost $5,000 in Amazon. Another risk to consider is the electricity consumptions and the risk for overheating your computer and starting a fire, because these computers are usually left 24/7 on. We are here at 99bitcoins.com. Now that we are done discussing the risks, let's discuss about the possible income and profit related to mining. This of course depends on how much you are willing to spend and how many computer hardwares are running. And also, you have to understand the Bitcoin difficulty. Since the Bitcoin network is designed to produce a constant amount of Bitcoins every 10 minutes, the difficulty of solving mathematical problems has to increase in order to adjust to the network's hash rate's increase. Basically, this means that the more miners that join, the harder it gets to actually mine Bitcoins. Here we can see the potential profit table. Here is the duration from day 1 to 1 month. The estimated earnings in Bitcoin. Estimated pool fees in Bitcoin. The fees that you are paying basically for mining. Here is the estimated electricity cost in US dollars and the estimated profit in US dollars. Remember, this is just a one-time investment because you will have the hardware for life or until it's broken. I hope you guys learned, and see you guys on the next video about cloud mining. Welcome back guys. Last time we discussed about the hardware part of Bitcoin mining. Now, if you don't have the capital to buy a mining hardware or you don't want the downsides of it, you can also participate in what we call cloud mining. We are currently here at genesismining.com. This is the most popular cloud mining out there as of right now. But what is cloud mining? Cloud mining enables users to mine Bitcoins or altcoins without the hardware. How this works is that the mining rigs are housed and maintained by mining companies. Customers simply need to register and purchase mining contracts or shares. But just like the hardware, cloud mining also has a downside. Its downside is that there are a lot of cloud mining scams. So make sure you do your research before you invest. Sadly, all the mining contracts at Genesis Mining is out of stock. But there are other cloud mining websites like Hashflare and Hashing24. Just always remember to do your research before you invest. Now, before I forget, going back to genesismining.com, the profit is calculated the same as the hardware, depending on the hashes that you have. And also, you can mine the other altcoins like Zcash, Monero, Litecoin, Ethereum, Dash, and of course the Bitcoin. I'll see you. What's up guys? Let's discuss about initial coin offering. An initial coin offering, also commonly referred to as an ICO, is a fundraising mechanism in which new projects sell their underlying crypto tokens in exchange for Bitcoin or Ether. ICOs are a relatively new phenomenon but have quickly become dominant topic of discussions within the blockchain community. This is an example of ICO website that I picked. I picked this since I am in the medical field. This is Altcoin. Let's look at what this is about. It says here it's a global blockchain platform for high-quality healthcare. Well, is globalizing healthcare and eliminating country borders to directly connect doctors, therapists, psychologists, and other healthcare specialists to patients worldwide. This is their problem, and this is how they solve their problem. Now, they have the whitelist. Participating in a whitelist gives you an actual bonus of 40%. This is just like a pre-selling before they do a public sale. Now, what's the benefit of joining or investing in an ICO? It is a way to get ahead because of the high capital gain. They sell their coins cheap with some bonus percentage of coins depending on how early you invest. But of course, there are risks associated with this because some ICOs are scams just like most of the coins in the market. So how do you prevent scams? One way is by looking at the white paper. It details everything you need to know about the currency. It shows their projects and timeline. Make sure you read about the team and how active they are. Overall, I believe in Altcoin because first, they will provide 24-hour healthcare services 365 days per year. Also, their service is international, wherein the doctors and other medical professionals are multilingual. And finally, they are promoting price reduction and low cost for consulting a medical specialist. In this way, people will definitely have access whenever they want and wherever they are. But just to make it clear, guys, I am not here to promote Altcoin. It may or may not be a scam. I just like the overall idea. So, it is up to you to do your own research, especially risk is higher in ICO investing because there is no guarantee it will be successful. Alright, that is it for the first part of the course, guys. Congratulations on finishing the fundamentals. It pays learning the basics. Now let me help you get started on trading on the next lecture. See you on the next video. Welcome back, guys. Today we are going to discuss about the tools that you need to get started in your cryptocurrency journey. But before that, I want to share to you a fact that I got from Instagram. This is from the future of crypto. Did you know that Airbnb is the most largest accommodation provider that owns no real estate? Also, Alibaba is the most valuable retailer that has no inventory. And I'm pretty sure that you know that Facebook is the world's most popular media owner that creates no content. While Uber is the world's largest taxi company that owns no vehicles. And lastly, of course, Bitcoin is the world's biggest bank with no actual cash. Bitcoin just surpassed the market cap of JP Morgan, which is the largest bank in the world. Now that is really exciting. Now, going back, let's answer the question of who can trade. Basically, everybody who are over 18 years old can trade. If you are younger than 18, you can ask an older person to trade for you. Another question is, how much money do you need to start trading? Any amount is okay, but take note that Coinbase, a cryptocurrency exchange, only allows you to buy $300 per week if you are using a debit card and $10,000 per week limit if you are connecting your bank account. Okay guys, on the next video I'm going to talk about the exchange platforms with 2FA securities. Hello guys, let me show you where I do my technical analysis. This is TradingView. I like this platform because it is very easy to use And in here, I will discuss the basics that you need to know before doing day trading using technical analysis. The only problem about TradingView is that they only have few cryptocurrency coins. Let's look at it. They only have Bitcoin, Ethereum, Bitcoin Cash, Ripple, IOTA, Litecoin, Dash, Ethereum Classic, and Monero. Let's go ahead and look at Litecoin. Okay, over here we would want to choose Litecoin versus Bitcoin because we would trade against the Bitcoin. And we want to click the interactive chart. Here it is. It may look overwhelming, but it's actually easy to understand once you know what you are looking for. Let's understand the basics. We are currently trading Litecoin against Bitcoin. We have the 4-hour candlestick, wherein each candlestick represents 4 hours, or 240 minutes. These on the left side are the tools that we use to draw or make lines on the chart for price and trend predictions. While here on the right side shows the Satoshi prices, wherein this dotted lines shows the actual price of Litecoin in Satoshis. But if we change this to Litecoin versus US dollars will show up on this side instead of the Satoshis. Now, let us look at the indicators that are on this chart. We can see over here the Ichimoku clouds. Ichimoku clouds define support and resistance. It identifies trend direction. The next indicator is the volume. The volume shows how many people are buying and selling. Obviously, the red shows the selling and the green shows the buying. And last indicator that we can see over here is called the RSI. The RSI, or the Relative Strength Index, correlates with the volume. If it's above 70, a lot of people are overbuying, while if it's below 30, people are overselling. This is it for now. I will discuss more about technical analysis later on the other lecture. But before we go on to the next topic, I'm going to show you another technical analysis platform that is called Coinigy. I use Coinigy for some coins that are not found in TradingView. This platform is very similar with TradingView. They have the same tools, charts, and indicators. They will give you 30 days free to try it, and after that, you have to subscribe to pay monthly to continue using it. I think it's about $20 a month. While technical analysis is really important, especially if you are day trading, another thing to talk about is regarding the social media references, especially if you are trading using the fundamentals. I'll see you guys on the next video about social media references. Alright guys, let's go to the exchange platforms. This is Coinbase. This is where I usually buy my cryptocurrency first because you can trade here using fiat. I can directly buy Bitcoin, Ethereum, Litecoin, and Bitcoin Cash using dollar. The good thing about cryptocurrency markets are that they are open 24/7, meaning to say you can trade or take out your money anytime you want. Let's go ahead and click sign up. In creating your account, you have to put in your first name, last name, email address, password, and your current state. Make sure to also click in yes to I'm not a robot, and you have to certify that you're over 18 and agree to the user agreement and privacy policy. Signing up is easy, but Coinbase will require you to submit an identification card and ask you a few questions. The reason is they are trying to prevent fraud. They will ask you to connect your email address, phone, and set up your mode of payment of either debit or linking your bank account. And that's it. It's as simple as that. Also, make sure that you enable 2FA, or two-factor authentication. It is basically an extra layer of security that requires not only the username and password, but also a code that you will get from Google Authentication app that only you have access to. Now, Coinbase will teach you how to enable this by going on to Setting, Security, and then two-factor authentication. Let us discuss another platform. This is Bittrex. It's basically the same process in signing up with Coinbase. Now, I go to Bittrex if I would like to transfer either of the currency that I bought in Coinbase to trade for other cryptocurrency coins. Take note that Bittrex has only Bitcoin and Ethereum markets, meaning if you want to trade other cryptocurrency coins, you need to use Bitcoin or Ethereum to buy them. By clicking the Markets tab over here, we will see all the Bitcoin markets as well as the Ethereum markets. As we can see, there are a lot of altcoins that we can buy and trade, compared to Coinbase that only has 4 cryptocurrencies. Here in Bittrex, they have altcoins like Lumen, Ripple, Ion, ADA, Ethereum, and so much more. Let's go to the final exchange platform that I will discuss. This is Binance. You are probably wondering why I trade on so many exchanges. It is because not all of the cryptocurrency coins are in one exchange. Just like in Coinbase, they only have 4 cryptocurrencies. While Bittrex has a lot of cryptocurrency coins, but not all of the coins are there. They are scattered in different exchanges. Now, while there are a lot of more exchanges out there, I would suggest to use the platforms that I discussed and be comfortable with it first, because it is not easy to track multiple coins on different exchanges. One way in looking for what coin to buy and where to trade them is by going to coinmarketcap.com and clicking the coin that you want. Let's say you want Cardano. You will then go to the Markets tab to look for the exchange that trades this coin. As we can see, Upbit, Bittrex, Binance, CoinNest, Gate.io, Mr. Exchange, and Abu Coins lets you trade or buy Cardano. Going back to the main page, I noticed that the market is down today. You can see all of these reds, but don't worry, it is healthy and it's not always like this. It may go down few percentage, but it will definitely go back up. Don't be bothered by this because even prices go down in stocks. Thank you guys for listening, and I'll see you guys in the next video about technical analysis platforms and social media references. I use social media as a reference in cryptocurrency, especially if I want to know the current news and updates. This is very important, especially if you are trading using the fundamentals, which you will learn more about as you go further on the lecture. Twitter is the #1 on the list if you want the current and latest updates or news on cryptocurrency. Don't know who to follow? You can follow me and look at the people I am following. This account is specifically only for cryptocurrency. I don't post anything here, but I follow a lot of people that constantly post every day and give you ideas on what's going on in the cryptocurrency market. You can also use Instagram or Facebook for sources. Just search cryptocurrency and all of the main pages will pop up. This includes groups and pages. Well, these are the major news and websites that you can also follow, but beware of the false news trying to manipulate the market. That's it guys, thank you so much for listening. I'll see you guys on the next video about getting started. Hello and welcome back, guys. If you are new to cryptocurrency, this will be a guide for you on how to buy your first coin in Coinbase. And I will also show you how to transfer them to Bittrex and Binance. Now, if you already know this, you can just skip the lecture. And if you have decided to get started today and invest at least $100, Coinbase will reward you $10. Now that's $110 worth of cryptocurrency. Just click the link that I will provide after this lecture. Okay guys, let's buy your first cryptocurrency. I am here in Coinbase under the buy and sell tab. We are here at the buy tab, basically. So we want to buy Bitcoin. You can then choose the payment method, which is I have here a checking account and a debit card account. Remember, I told you on the checking account, your max limit would be $10,000 per week, while on the debit card, your max weekly limit is $300. Buying a Bitcoin and how much Bitcoin you will get, of course, depends on the actual Bitcoin price. Let's say if we're going to buy $100 worth of Bitcoin, it's going to give you about 0.008 Bitcoin. Let's try and buy. You also have to know that every transaction that we do on Coinbase will have a transaction fee. Okay, let's go ahead and confirm buy. It was successful. Now the Bitcoin will be available in your Bitcoin wallet instantly. Let's view the dashboard. It is here. We just bought our first Bitcoin, guys. Now, if you then decided to sell your Bitcoin because you already made a profit, let's say because the Bitcoin price went up to $15,000, you would just go to buy and sell tab and click the sell tab over here. And you would want to put how much Bitcoin you want to sell. Let's say you want to sell all of the Bitcoins that you have. The US dollar equivalent will then show up here and you can just click sell Bitcoin instantly. Let's go to the accounts tab. As you can see here, I don't keep my coins on the exchange because I have a hardware wallet where I store my coins for safety. Now, what if we want to send some Bitcoins to Bittrex account? Over here we can see if you want to send Bitcoin and or receive some Bitcoins. In this case, let's try to send some Bitcoin. You would then enter here the Bitcoin address that you would want your Bitcoin to be sent to. Let's go ahead and try to send some Bitcoins to our Bittrex account. On Bittrex account, I am under the wallets. Let's go ahead and look for Bitcoin. Okay, on the Bitcoin tab, you would want to click the plus sign or the deposit sign. The minus sign is for the withdrawals. Okay, let's click on the plus sign. Okay, this is the deposit Bitcoin address in Bittrex, and we want to copy this and paste this on Coinbase. Now, let's send all our Bitcoins to Bittrex. Remember, I told you that every transaction has a transaction fee, especially for Bitcoin. Bitcoin's transaction fees are really expensive because we pay the miners to do the transactions for us. Now let's click continue. This is the 2FA that I was talking about. If you enable this in your settings under security, it would be a requirement to enter this code whenever you are signing in Coinbase and whenever you are sending coins. This is very important for security purposes. The codes will be found on the Google Authenticator app that only you have access to. These codes changes every 15 to 30 seconds. Okay, let's enter the code. And that's it, guys. The Bitcoin will be sent to Bittrex in a matter of few minutes to few hours, depending on how busy the market is. You just learned how to buy, sell, and transfer cryptocurrency. Take note that Bitcoin has the highest transaction fees and takes the longest time if you would send it to another exchange. The altcoins, however, are a lot cheaper and faster. On the next video, I'm going to go more into details about how to trade altcoins. See you! Let us now talk about trading altcoins. In this video, I will also show you entry and exit points, like when to buy and when to sell for maximum profit. We are back here in Bittrex exchange. Let's look at digital note or XDN on the Bitcoin market. Okay, let us use this as an example here. But before we begin, I want to tell you the first rule of trading. You have to buy low and sell high. Meaning to say, buy when the price is low and sell when the price is high. In this case, XDN is trading at $0.03 or 305 Satoshis, having a 24-hour high which is $0.04 or 328 Satoshis, and a 24-hour low which is $0.03 or 295 Satoshis. Looking at the chart, on the other hand, we can minimize this for a bigger picture. We are, by the way, on a 30-minute candlesticks, where each candlestick signifies 30 minutes. It had an all-time high of around 624 Satoshis back in January 6. Now, this being said, I would say that this is the perfect time to buy. We are buying low, and I'm pretty sure that the price of this will go back up to around 600 Satoshis per XDN or even further. When that time comes, that would be the perfect time to sell depending on the circumstances. Or you can also hold your coins and wait for better opportunities and bigger gains. Okay, let's try to buy some digital note. Remember, we bought $100 worth of Bitcoin earlier. It arrived in about an hour. I am going to spend all of my Bitcoins to buy more XDN. I would then click max, pick the last price, which is 303 Satoshis or $0.03. It would then give me 2,695 XDNs. Now, imagine if the price of XDN goes up to $1 each, which is very possible. It's just a matter of time. Your $1 investment will then turn to $2,695. That is very exciting indeed. Okay, let's go ahead and buy some digital notes. Confirm. And our order is placed. Now, it would be down here on the open orders because we ask, or our bid price is 303 Satoshis. But let's look at the current price of XDN right now. It is trading at 306 Satoshis. So before we even get to buy digital note, the price should drop to 303 Satoshis where we bought it. Or we can also cancel our order here and just change the price to the last price, which is 306. Then our buy is filled. Now, if we are going to sell, that would be the same principle and process. I hope you guys learned something today, and I'll see you guys on the next video about technical analysis versus fundamentals. Hi guys, and welcome to my technical analysis versus fundamentals lecture. Before we proceed, Technical analysis is really broad and advanced. This is a whole new topic of study, and I suggest you to buy books or study online courses to further your knowledge about technical analysis and chart patterns. This is the technical analysis that I did a few weeks ago in TradingView. It turned out that TradingView now has more cryptocurrency choices. Let us review all the indicators and everything that we see on this chart. We are using Udemytube against Bitcoin as an example here on a 240 minutes candlestick on Poloniex exchange. The bullish candlesticks or the green candlesticks shows when the price is going up, while bearish candlesticks or the red candlesticks indicates when the price is going down. While on this side on the right are the Satoshi levels, having the red dotted lines, the actual price of Udemytube in Satoshis. We already discussed about the Ichimoku clouds, which defines support and resistance that also identifies trend directions. The volume are how many people are buying and selling, while the RSI, Relative Strength Index, shows and correlates with the volume, that if it's above 70, it is overbought, and 30 or below, it is oversold. Now, what are the resistance and support levels? The resistance and support levels are the same as the stock market's technical analysis. It is a concept that the movement of price of a security will tend to stop and reverse at a certain predetermined price levels, and these levels are denoted by multiple touches of price without a breakthrough level. This is the resistance level that was created when the price bounced back, while this is the support level that was created when these prices are playing on the ascending support level. These support and resistance lines can be parallel lines depending on the price movement of the coin. In our case, it formed an ascending triangle. Now, an ascending triangle usually is an indication of possible breakout of either the resistance, or it could be a breakout of a bearish movement, or the price would go down. Now, how would we know if the price will be bullish or bearish? Elliott waves will be our guide in this situation. What are Elliott waves? Elliott waves, in theory, is one of the most accepted and widely used forms of technical analysis. It describes the natural rhythm of crowd psychology in the market, which manifests itself in waves. In this case, our Elliott waves are 1, 2, 3, 4, and 5. There are other different kinds of Elliott waves out there, but I will be discussing this kind where 1, 3, and 5 will be the exit points, or where you want to sell the coins. And 2 and 4 will be the entry points or the buy points. Remember, you would want to buy low and sell high. And here in this chart, we are talking about day trading. What are these ABCs over here? These are called ABC correction. After an Elliott wave, there would be an ABC correction, just like what they said. What comes up must come down. These corrections will be, of course, lower than the highest point of the Elliott wave, where in this chart I predicted that the price will drop to A, B, and C. And do you also remember that I told you about the ascending triangle, that it is an indication of possible breakout of either resistance or support? In this case, once it breaks out the support levels and just tends to go down, it would be bearish. But if the price goes down over here and goes up, it could indicate breaking a resistance and will make a new all-time high. This is technical analysis. It's all about predicting. Now, do you want to see what happened on the chart today? Let me show you. This was my technical analysis a few weeks ago, and this is the chart now. We were right about our ABC correction, but B and C should be here. After the ABC correction, the price became bullish and broke out our resistance level and made a new all-time high. Now let's say we didn't know what the chart was doing. When do you buy and when do you sell? Now following our ascending triangle, once the price goes up here and broke out a little on the resistance level, this would indicate a really good time to buy, because we would know that the price would go up and will make an all-time high. This would modify our principle of buying low and selling high, because if you would buy low at a C or letter C correction, we wouldn't know if the price would still go up. I hope you guys learned something about technical analysis. For now, let us move on to the chart patterns. You can always review the video about technical analysis until you master the basics. But for now, let's move on to the chart patterns. These are some of the bullish patterns that I will be discussing, and it also shows you the buy points. Let's discuss our first chart pattern. This pattern is called pennant. This would be our resistance and this would be the support. And as you can see, this is the buy point, and every time the price would break out resistance, that would show a good sign to buy, because it usually indicates that the price will go up and it will make a new all-time high. This then would be the best time that you would sell if you are day trading. Let's move on to the next chart pattern. This one is called cup and handle, obviously because this is the cup and we have the handle here. And this is the buy point. This is our resistance level here, having the price go down and bounce back up, forming a cup. And this would be our resistance level, having the handle testing the resistance before it bounced back up, breaking our resistance level. Now remember that the best time to buy would be the price before it breaks out of the resistance. Next one would be what we call symmetrical triangle, having a resistance level here and our support level here, forming a triangle. We have the buy point, of course, on the breakout. And guess what? After breaking the resistance, it made a new all-time high and made another one and another one. Okay, enough with the bullish pattern, and we have to face the reality that whenever the price goes up, it also comes down. We have here the bearish patterns. While there is a ascending triangle, there is also a descending triangle, having a resistance level here and our support level here. Now this time, instead of breaking out of the resistance, it broke out of the support. And in order to minimize our loss, we have to sell at this point. Now let's go on to the next one. This is called 3 descending peaks, having our first peak here, the second peak, and the third peak. Let's form our imaginary resistance and support levels. Now this one would be our imaginary support level, and this one would be our imaginary resistance level. And yes, it formed a descending triangle. And as we know about the descending triangle, there's a possibility that it would break out of the support. This would be then the best time to sell after breaking out of the support. The final bearish pattern that I will discuss is called the flag. This is our resistance level, and this is our support level, hence forming a slanted flag. Again, applying our principle to sell after breaking out the support, this is where we are going to sell. Okay, that is it guys for our technical analysis and some chart patterns. Let us now compare this to trading using fundamentals. I'll see you guys on the next video. What is fundamental analysis? Fundamental analysis focuses and concentrates on the financial drivers of the economy itself. Traders will often follow news, announcements, and data releases. Traders also believe sentiment based on news and economic data releases that drives the market. Fundamentals trading is easier compared to technical analysis. You just have to be always updated and you have to know everything that's going on the cryptocurrency coin that you are investing in. Look at their website and study what that cryptocurrency is for. Look at the team and the community. Don't always believe the news. They are sometimes trying to manipulate the market. And while technical analysis enables traders to gain a vision of the market and make the right move at the right time, fundamentals analysis should be applied strategically over long periods of time. This is suggested for beginners, but you can also combine technical analysis and fundamentals to see the whole picture and be able to trade better. Fundamentals is as easy as that. Now that you know how to do technical analysis and fundamentals, and their differences, let's now talk about where you will put your coins for safety, especially if you want to keep them for long term. And these are called cryptocurrency wallets. We will discuss this on the next video. Now that we know how to buy, sell, and trade using technical analysis and fundamentals, where do we store our coins, especially for long term? We have a hardware wallet, paper wallet, and a software wallet, which composed of the desktop, mobile, and online. Let's start with the hardware wallet. This is called the Ledger Nano S. This is what I personally use. Ledger Nano S is a Bitcoin, Ethereum, and Altcoins hardware wallet based on robust safety features for storing cryptographic assets and securing digital payments. It connects to any computer via USB and embeds a secure OLED display to double-check and confirm each transaction with a single tap on its side buttons. And these are going to be the side buttons, and this is the screen OLED. Now, it may be expensive, but you are actually paying for a good quality because This Ledger Nano S can be stored offline, and it would only go online once you actually connect it to the computer, which is very safe. Now let's look at what the Ledger Nano S currently supports. So these are the list of cryptocurrencies supported by the Ledger services. We have the Bitcoin, Bitcoin Cash, Bitcoin Gold, Ethereum, and so much more altcoins. But how do we actually store coins in a wallet? It would be similar on how you transfer a coin from one exchange to another. You simply put in the address of the coin you want it deposited. And if you are experiencing any technical issues or problems storing your coin, they have a documentation tutorial on this side for every cryptocurrency. Now, let us discuss about another hardware wallet. This is called Trezor. Now, how does Trezor work? The Bitcoin protocol works by sending signed notes of payments across the internet. These messages, which are transferred or referred to as transactions, are signed using a special algorithm. In order to sign a Bitcoin transaction, you need to have a special key or password. Trezor holds that key. Since Trezor's job is to help you securely sign transaction messages, you can think of your Trezor as a modern-day stamp. It works basically the same as the Ledger Nano S. Now, what are their differences? Aside from how they look, let's look at the cryptocurrencies that the Trezor actually supports. Now, as we can see over here, the Ledger Nano S supports more cryptocurrencies compared to the Trezor. The Trezor supports about 15 cryptocurrencies, while the Ledger Nano S supports more than 20 cryptocurrencies. Let's move on to the next wallet. This is called Paper Wallet. A paper wallet is a document that contains copies of the public and private keys that make up a wallet. Often it will have QR codes so that you can quickly scan them and add the keys into a software wallet to make a transaction. The benefit of a paper wallet is that the keys are not stored digitally anywhere and are therefore not subject to cyber attacks or hardware failures. The disadvantage of a paper wallet is that the paper and ink can degrade, and paper is relatively fragile. It's definitely worth keeping well away from fire and water for obvious reasons. Furthermore, if you lose a paper wallet, you'll never be able to access the bitcoins sent to its address. Let's move on to software wallets. This is a desktop wallet. It's called Exodus. So what are desktop wallets? These are computer programs that store your currency locally on your PC or laptop. One of the primary advantages of the desktop wallet is that it offers complete control of currency to other users without having to rely on any third-party interface. However, on the flip side of the coin, it means that the entire security is up to you. If you get hacked or compromised, or if your computer or hard drive breaks down, you may lose your coins forever. The fear of hacking is one of the reasons that some people prefer to use unused or spare computers that never have access to the internet to store their currency, known as cold storage, or what we call the hardware wallets. How this works is that you will just download the Exodus wallet on this link, and this is how the desktop wallet would look like after you download it. Another type of software wallet is called mobile wallet. Mobile wallets operate through an app on your mobile phone. The primary advantage of mobile wallets is that it allows users to quickly access and easily use their coins in a physical retail store. Mobile wallets comes in two formats. One type of app stores your coins locally on your phone and comes with the same advantages and disadvantages as desktop wallets, while the other format of mobile wallet merely provides you with access to online storage servers, which comes with the same advantages and disadvantages as online wallets. BitPay is an example of a mobile wallet that's format is the same as the desktop wallet. Another mobile wallet that we have here is Coinbase. They have an app that's format is similar to online storage servers or an online wallet. Coinbase.com here is considered as an online wallet. Now, don't get confused. Coinbase has an online wallet and they also have a mobile wallet that you can access through your phone, which purpose is similar. You can basically access them on your computer or phone. But what are online wallets? They are web-based wallets that can be accessed from anywhere and are thus more convenient as they can be accessed from any device. And they may also be linked to desktop or mobile wallets. However, the major disadvantage is that the private keys are being stored by the website owners rather than locally on your device. And this type of wallet therefore requires you to put a lot of trust in the owners of your online wallet and therefore trust their levels of security. Those wallets that we discussed were pretty cool, right? But before we move on to the topic of creating your cryptocurrency investment portfolio, one advice that I want to give you is that you should never leave your coins on the exchanges for long term unless you use them for short term trading. Put them on a wallet that you are comfortable with. This will prevent you from losing your coins if ever those sites gets hacked. That is it, guys. I will see you on the next video. Hello and welcome guys in creating your cryptocurrency portfolio. Here we will discuss how your long-term and short-term portfolio should look like. But first, let's look for the platform where you want to monitor your coins. This includes the total amount of portfolio you have, how much coins you own per cryptocurrency coin, the percentage of your core cryptocurrencies, which are the Bitcoin and Ethereum, and of course the altcoins. In this platform, you should be able to put your tradings like when you're buying and when you're selling coins in real time, and you should be able to monitor your gains and losses. The current platform that I use is called CoinStats. It's a mobile app and I like it because it's super easy to use and I can check my portfolio anytime I want. If you are a desktop person though, I suggest you use cryptocompare.com. It's just a little complicated to use at first, but you will get used to it. Some of the portfolio platforms have a ticker that you set up where they will notify you if the price of a coin drops or went up a certain price. This will help you trade better and buy and sell at the right time. You can also usually change the value of your total portfolio to either US dollars or Bitcoin value. And also remember, when you are putting a coin that you just bought or sold, to put it in the actual date and time and the amount of coins you traded. This way, you can keep your portfolio as accurate as possible. I also like to do a separate portfolio of my core cryptocurrencies, which are for long term, and my altcoins for day trading to keep it more organized. Okay, let's show you how an actual portfolio looks like. We are going to use CryptoCompare since we are using the desktop now. I first just want to cover how CryptoCompare portfolio works. This would be the total value of our portfolio here. This would be our profit or loss. It is green if it's profit, and it would be red if it is loss. This is, by the way, the 24-hour profit loss tab. Here is going to be the chart of your portfolio, which is a little messed up because we are just trying to make this as an example. Down here would be our cryptocurrencies. Our Bitcoin and Ethereum is our core cryptocurrencies. Right here would show how much holding we have. We currently have 0.25 Bitcoins and we bought it at $8,000. Its current price right now is about $10,000. This will be the total value of our Bitcoin, and here is going to be how much we profited. And of course, we are going to see the percentage of how much Bitcoin have grown. I am now going to show you how to add a coin in your portfolio. Just click the plus sign over here. Let's say you want to buy some Verge. You would then put the amount of Verge that you bought. Let's say you bought about 6,000 of Verge. The last price that I saw Verge was about 0.06. And just click add to portfolio, and there we have it. We bought 6,000 of Verge at $0.06, and the total value is $432, and we already have a profit of $72 and 20% gain from when we bought it. But of course, you wouldn't have this much gains right away when you bought it because the actual price of Verge is 0.07 instead of 0.06. And that is why it is very important to put in the accurate information for an accurate portfolio. Now that you know how to manage CryptoCompare's portfolio, let us now talk about the difference between the long-term portfolio and the short-term portfolio. What I will show you is just an example, guys, okay? I'm going to show you how a long-term and short-term portfolio should look like. If you are planning on investing for long-term, this is how your portfolio should look like. As you can see, and noticing that the core cryptocurrencies, which are the Bitcoin and Ethereum, is about 70% of this portfolio, having $10,300 in total. You would want it to be that high because they are the leaders of cryptocurrency, which has the highest market capital, while keep the altcoins about 30%, and because you would want your portfolio to still have diversification. This portfolio's total amount is $15,000, and 2/3 of it having our core cryptocurrencies. While if you are doing short-term trading, this is how your portfolio should look like, having 60 to 70% of the altcoins and 30 to 40% of the core cryptocurrencies. The reason behind having more altcoins on this portfolio is that if you want to do day trading, you will have more opportunity because the altcoins can give you bigger gains in short term, but also a lot riskier. But I still have my core cryptos just to keep the balance. In the end, the goal of this kind of portfolio is still to buy more core cryptos because we want to lessen our risk in the future for our investments. Thank you guys for watching. On the next video, we are going to talk about money management and investment tips in creating your cryptocurrency portfolio. Let's discuss about the most important part of investing. This is the money management and investment tips in creating your cryptocurrency portfolio. Number 1. Invest only what you are willing to lose. If you want to invest $1,000, make sure it is okay for you to lose $1,000. Every investments have potential to grow, but also there are risks involved. Number 2, as soon as you made profit, more than how much you put in, you can take out your initial investment. This way, you already won as a trader, regardless of what happens on the money that was left after you took out your capital. Number 3, after taking out your capital, reinvest all of your profits for more. In this way, your portfolio will be bigger than you can imagine. But make sure you don't put all of your coins in one basket, which will be our number 4. If you put all of your coins in one basket, the risk of losing it all is very high. It is better to have several investments on other cryptocurrencies, and you have to diversify. Number 5. Make sure you study all the altcoins that you want to invest in. Don't invest in a coin because your friend is investing in it. Do your own research. And every wise investor knows where he is putting his money. Number 6. Never trade based on your emotions. If you feel sad because you lost a trade the other day, don't let it affect your trade today. Accept it and move on. Just like what they have said, today is another day. You can still make up for what you have lost. Number 7. Look for undervalued coins. And how do you do that? You have to look for cheap coins, but not just that. You have to look at their project, the team, and its foundation. If you think that the price is really low and have big potential to grow, you found yourself an undervalued coin. Number 8. Build a good portfolio. You have to have long-term coin investments that you think will be there until the end. The coins that really contribute to the society. But also, you should have investments on the other coins which has high risk but also high rewards. In this way, you can have a variety and better opportunity for bigger profits. Number 9. This is very important. You have to be patient. It is not always the right time to buy or sell. Feelings and guts are not enough. You have to actually know when the right time is. Apply all of the things that you learn, including technical analysis and fundamentals. And lastly, number 10, HODL. Prices of cryptocurrencies are volatile. It will go up and down. It will experience some market corrections, but in the long run, it can be 100 times or even thousands of times more than how much you bought it for. I'll see you guys on the next video about pro tips, including how to look for cryptocurrencies that has the most potential. Pro tip number 1. If you are trading for altcoins using Bitcoin as your main exchange, focus on the Satoshi price, not on the dollar value of the coin. Why? Because you are not trading for altcoins using a dollar. And current Satoshi value is not the same as the dollar value. In short, you are buying the coin for its Satoshi price and not the dollar price. Looking at coinmarketcap.com at the charts, this is a very good example. REP's dollar price may be $79 and its Satoshi price of 706,000 Satoshis compared to its previous price, which is $16 and about 300 million Satoshis. And yes, it is inversely proportional to each other. That is why it is important to know the Satoshi price, because this is what we are trading for. Pro tip number 2. Make sure you do your computations before you even buy cryptocurrencies. Make sure you know first how much coins you are getting in exchange for your dollar. This will be more technical if you would trade Bitcoin or Ethereum to other altcoins. So how do you do the computations and where can you do it? This is coinmarketcap.com, and this is where I usually do the conversions and computations. It's going to be under Tools and click Currency Converter Calculator. So this is Bitcoin against US dollars. This would be the amount of US dollars per Bitcoin. Let's say 1 Bitcoin right now is 11,250 US dollars. Let's actually try to interchange this because we would want to buy Bitcoin using US dollars. Let's say you have $1,000 to invest right now. This would be the amount of Bitcoin that you would get for $1,000 if you would invest your money now. Having this Satoshi price, of course, you would want to copy this because this will be your main currency now. And let's say you want to buy REPs using Bitcoin. We would then just paste the Bitcoin price over here, or Satoshi price, and change this to Bitcoin and change this to REP. This will then be the amount of REPs that you will get for this much of Satoshis, or for $1,000. Pro tip number 3. How to not lose a trade. If you are upside down on a coin, especially in a day trading, but also can be applied in long-term trading, when you bought it at a certain price and the value suddenly dropped, just hold it. Depending on how valuable that coin is, it is better to hold because the price will go back up depending on the technical analysis and fundamentals. This is especially applicable for Bitcoin and the other major coins like Ethereum, Litecoin, Monero, Dash, and more. But if you are trading a high-risk coin, it's better to set up a stop loss, wherein if you see that coin is losing money instead of gaining, better to take it right away. But the most important thing is to never panic sell. Look at the coinmarketcap.com for price changes at least twice a day, once in the morning and once at night. Pro tip number 4. Buy low and sell high. Everybody knows to buy low and sell high, but there's a reason why people do the exact opposite. Emotions like FOMO, or fear of missing out. FOMO causes people to chase parabolic trends and then they panic sell at crashes. Don't be like them. Instead, be smart and wait for another opportunity to jump in. Pro tip number 5. How to know which coin to buy. This is everybody's question. The answer is simple. Just apply everything that you learned. Look at the white paper. Again, study the coin that you want to invest in. Liquidity of the market, the price movement, and previous growth. It is important that there are price movements, whether it is consolidating or occasional upward or downward trends. It is also important to know the previous price of the coin, especially if it was an all-time high, because there is a high chance it will be back to that level again. Next is volume. It is important to know this because you would want to know when the people are buying and when they are selling. Also, an increase in volume means that the price of the coin has high possibility of going up. Remember, supply and demand. The higher the demand, the higher the price will be. Market capital. Market cap is as important as volume. The higher the market cap is, the safer your investments are. But growth of the coins could be minimal. On the other hand, if you invest in coins which has low market cap, it has more room for growth and can make you large profits. But also, remember, it will be more risky compared to higher market cap coins. Technical analysis and fundamentals. Of course, Just like how we discussed it, by applying these two strategies will make you a better trader. Just remember to do some more research and study more about technical analysis, especially if you want to do day trading. And lastly, follow the whale. A little recap. What are whales? These refers to an individual or group of people that can manipulate the market using their massive crypto wealth. They like to pump and dump, meaning they would buy a coin at a low price with their massive wealth, and of course, people will start noticing it and starts jumping in. Once the price goes up to a profitable level, they like to dump that coin and take away all of their massive wealth, including their profit. I'll see you guys on our last video about how to look for cryptocurrencies that has the most potential. Welcome guys, we are going to discuss about how to look for cryptocurrencies that has the most potential. I am here at coinmarketcap.com and we are going to discuss about Substratum and make it as an example. Let's look at this. It currently has a market cap of 200 million. It is actually good and because it has more room for growth. I like to pick coins that are above 100 million market cap because it is safer that way. You can also look at lower market caps, but those are riskier. But once they go up in value, it can go up significantly. Next would be the price. $0.9 is super cheap. You can buy more than 1,000 Substratum for $1,000. Having a 200 million circulating supply is not that bad either. The volume is low and by looking at the chart, it is actually on a dip. Substratum is actually down 5.87% in the past 24 hours. It's not just that. The whole market is actually down, making this the best time to shop for coins because they are on sale. Let's go ahead and look at Substratum. It is currently trading at about 8,000 Satoshis, and which is actually a good price if you would ask me, compared to its all-time high that is about 20,000 Satoshis. Remember, the possibility of it going back to the price of the all-time high is very likely to happen. Let's look at the market. Currently, Substratum is trading on Binance, which is one of the biggest exchange out there. It is currently at rank number 105. Let's look at the website to know more about the coin. Again, I am not here to promote this coin. I am just showing you how I look at potential coins that are highly possible for huge gains. I also already did some research about Substratum and their white paper and their team. They believe in the decentralized web. Substratum are attempting to create the foundation of the decentralized internet through the introduction of decentralized servers. Also, they have a good team. The team consists of 22 developers, designers, architects, and project managers, most of whom have been working together for the last 13 years. During this time, they have developed and deployed software solutions for a number of Fortune 500 companies, including Apple, Disney, and Facebook. Okay, let us review everything that we know about Substratum. It is cheap, it is only trading at less than $1. You can invest $1,000 to get more than 1,000 Substratum coin. Only 200 million total supplies are circulating the market. We discussed about the supply and demand. wherein the demand increases when a lot of people are buying and the supply decreases. As a result, price of each coin can significantly go up. It also has over 200 million market cap. Investing in a cryptocurrency with market cap of over 100 million is a bit safe because that is a lot of money. It won't suddenly drop from 200 million to zero in an instant. Overall, this is what makes it an undervalued coin. After finding an undervalued coin, it's now time to invest. So how does it work for day trading versus long term? On day trading, price of substratum can go up to $1.30 or more in a single day. That's when you take out your profit and gain about 30% or more just by doing day trading. But you have to also know that on day trading, you do not always win. Sometimes the prices can go down instead of going up. So if you listen on my technical analysis lecture, you know when to buy the coin and when to take it out. You would never want to sell it low. While investing for a long term has the same principle. When you buy substratum at $1, you simply keep it for long term. Now, depending on how long you keep it, few months or even a year or two, this is when you can gain 600% up to few thousand% in profit. But take note, holding a coin for too long comes with a risk too. You have to continually monitor the price and make sure it maintains its volatility and not trending down. Simply following these steps and learning from your mistakes will make you a good trader. This will be the end of my course, guys. I hope you guys learned from everything that we discussed and make sure you apply them. Thank you so much for your participation. Also, by the end of this course, you will see an article regarding the tax regulations. It is important to know it before taking out your profits. You can also email me for questions and suggestions at cryptotraderv23@gmail.com. Again, thank you so much and talk to you guys at our Discord group.